Welcome everybody, Technical Trading Part 3. For the Part 3, I decided to make an agenda to talk about different things. So today I was thinking about starting with the terminology. Quite a few times I might say or use different terminology. If we talk about buy or sell, we can be talking about long or short. Buy would be long, sell would be short. If I talk about bull or bullish, means buyers, or if I talk about bears or bearish, would be sellers. We also buy on a bid price. We sell security on ask price. There's a spread between the bid and ask that we pay to the dealer to get into the trade. So spread would be difference between the bid and ask price. That's what dealer get. We're going to be talking about the stop loss. Stop loss prevents the price going against you and losing all your investment or big chunk of the investment. We're going to be talking about pullbacks, which means the same thing as retracement and also corrections. We're going to be talking about the candles. I might mention instead of candle, I might say bar. And then we have trending, we have a consolidations, and we have a ranges or boxes. We have a trending markets, we have a consolidated markets, and we have a range markets. Market can do three things. It can either sell off or bearish market. It can be in buyer's market or bullish market, or it can be in a range. In technical trading, we are able to trade in either of those conditions. So once we get to the charts, we can see the market is in a sell-off mode or bearish mode. So this is where our trading strategy comes into play. When the market starts falling, you will find this specific area that we're going to call support. Like you would fall from the ladder and then you find a support on the ground. You would get up, or a market bounces back. It would retrace, or it will pull back to the certain area, and it will find the resistance. So if you are, let's say, trying to climb on a ladder and you hit with your head on the ceiling, that will be resistance. That's the easiest way to explain. So market falls. It finds a support, pulls back, it finds a resistance, and then falls again. Once the market passes this mark here, or this level here, where it's marked with the red line, the market is in a bearish move. So up until now, we would have a market that's climbing. It turns around for some reason, stops at a certain area, pulls back, and makes this move through this red line and goes to the next support. How do we call this? A high, which was right here. We make a low, which is right here. We make a lower high, which is right here. And then we make a lower low. With this lower low, we confirm the bearish market. Market will retrace or retest this area where it broke through. It will find resistance if it's strong enough to hold that price, and it will fall again and continues on like that until it finds a support where it cannot break. It will go high, low, lower high, lower low, lower high, lower low, lower high, and then finds another support maybe at the same area where we might be looking at the market turn. I'm going to talk about that later. So in the bullish market, everything else goes the opposite way. We had a market that was falling, which would be coming from this side, which was a bearish market. We found that support on the bottom. We have a lower low, then we make a lower high, we make a higher low. This is a higher low than this one here, and then the market breaks through this area and confirms a bullish move, which is called, once again, 1, 2, and 3. This is Dow Theory. So we had a market that's falling from here. Market finds an area right here. We have an area of support. Market moves up, makes a lower high, falls down, makes a higher low. This low is higher than this one here. This is a low, this is a higher low. Once we break this line here of this lower high, the market is in bull move. So from here on, this part, we confirm the bullish move. Market again finds the ceiling or resistance, falls down, reconfirms this area if it's strong enough to hold, so if it doesn't fall below. So if it confirms this area to stay the way it is, market will continue on in a bullish move and will repeat the same way. You will make a higher high, higher low, higher high. So this is how the market moves. This is a Dow theory once again. So market starts moving up, pulls back, breaks this area here, confirms the bullish move. This is the bullish side now. Up until here, we're on the bearish side. Now after the Dow theory explanation, after this area here, we have the bullish move to the upside. Market comes back, and this is the area where we hunt for our trade. This is where we are waiting for our signal to develop and then to buy into market. So this is the area where we would be looking to buy in when the market moves out. We know that this was resistance before. Now this resistance turns into support because the market moved through it, comes back, retesting this area, and when we get a perfect signal to buy in back into the market, we continue on. So this is the area we look to buy in. This is the area we look to buy in. All right, this brings us back to part number 2, which is the support and resistance. How do we find these areas? So we're going to go on the live charts here, and I'm going to try to explain once again how to find the support and resistance. It's very important that you understand how this is done, because if you find a support and resistance the right way, you will have a perfect area to hunt for your trades. Those will be the areas that you're looking for your highest probability trades you can find. Once again, it's the easiest way to find the support and resistance is where the market stalls. It's very important for us to understand and to find these areas, because those areas will give us an opportunity to get into the trade. The easiest way to find the support resistance is to look at the charts. In front of us we have at the moment Australian dollar against the US dollar. We are looking at the monthly chart at the moment. I'm going to just mark this part here in pink, so you can see how when we switch to weekly charts, everything basically, we just see the bigger picture, because every single one of these candles or bars is representing 1 month of trading. So 1 month of data is represented in every single one of these candles. So when we go to weekly chart, we just enlarge this area, the pink area that I just actually put in there. So you can see now how big this area is. I just enlarged it. And this is how much data is included in that a little bit of monthly chart that we're looking here. Now we go to switch to a weekly chart. We are in sell-off conditions at the moment. The most important area of support and resistance is the most recent area. So for us, this peak right here represents the most recent area where market stalled as far as the resistance. So we're going to mark that one here. We can also see that this area here, the top of this candle, showing us that the market stalled at this pretty much same area before once. Then we have another stall here, and we stopped at the same area here, and same area right here, and the same area here. So basically what this tells us is that this area is very, very important for us to look at. I'm going to switch to daily chart at the moment. So now we can see that the same line that we pointed out on the weekly chart, I'm going to show you where. So this area right here is just enlarged data on a daily chart. So this is the same area here. Put this little rectangle here and switch to weekly. You can take a look. You can see that I marked actually this exactly area. The market stalled here. We know that this area was resistance. It is resistance because the market is pulling back to this area. This is a great resistance area for us to hunt for the trades. Once we have found the support resistance as we did on the chart. So we are at number 3 right now, which is conditions for trading. So let's move back to the chart again. The trend is your friend. That saying you probably heard so many times, people saying it. We have a trend looking from left to right. The market is falling. and this is the trend, and we are in sell-off mode. Whenever we need to find what trend we are in, depending on the chart we are trading on, we have to look from left to right. And as we can see, from left to right, market is in a downtrend. We are on the weekly chart. We decided that the market is in a down condition. We found a support and resistance. In this case, this was a resistance because the market was pulling back. Market came down, find the resistance, fell from there. This was the bottom, so that was the support. This is the most recent support that we can see on the weekly chart. Area of resistance, area of support. I'm going to go over one more time over candlesticks because candlesticks are very important, and when I'm talking about these signals, I'm going to be talking about signals that we get from candlesticks. So we're going to be talking about entry first. Once again, I'm going to remind you how the candlesticks work. We have basic creation of the candle, which is the wick. This is a wick. This is the body of the candle right here, and then we have a lower wick. Also, we have for the bullish candle and the bearish candle, we have the high, we have the low. For the bullish candle, we have the open on the bottom and close on the top. For bearish candle, we have again high, we have a low, but this is the opposite way because the candle opened from this side. So the open is on the top and the close is on the bottom because we are selling. So the market is moving to down, and in bullish move, it moves up. Candles that we look for the entries. So let's talk about pin bars. In order for the pin bar to be clear signal, it has to close. So this body of the pin bar has to close within the candle that was previously created. The body of this pin bar is closed within the candle length of the previous candle. This is another continuation pin bar signal. It closes within the body of the previous candle. This, however, here is not a valid pin bar. This is not a valid bearish or seller's pin bar because the bar closed right here, which is outside of this candle that was previously created. Bearish pin bar is just an opposite from the bullish one. We have the previous candle, which is right here, okay? And then we have this beautiful pin bar form, and we close. This is the close for the bears. We close, so the body is within the candle length of the previous bar or candle. So if you can see here, we are closed within this previous bar right there. This is another example of the continuation pin bar. We have the previous candle right here, and then the body of this candle closes within the previous candle. For the engulfing bars, we have a previous bar. We have opening price of the engulfing candle. We don't know if it's going to be engulfing, but anyways, if it closes like this, then we know it's engulfing. The bears push the market down. We have this long wick on the bottom. Bulls take over at this point of time because the bears were not able to hold it. So the low, at the low of this candle, we have a bulls coming in again into a market. They pull the market back to the opening price. We pull the market back to the opening price, and then they continue on to close the candle at the high. This whole candle engulfs the previous candle. It's engulfed, and also has a huge pin on the bottom telling us that bears failed to hold the market below this price here. Bulls took over and they closed the market higher. Same opposite happens to the bears. We have the previous candle, which is right here. We have bulls that push the market up. We're not able to hold it at a high. Bears take over. They bring the price back to the opening price, and then they pull down market and they close it on the low. The market, this candle closes lower than this previous candle. So if we look, take a look here, this whole candle basically engulfs the previous candle, which makes it engulfing candle or bar, engulfing. It is bearish in nature because the open is on top and the close is low or right on the low. Could have a little wick on the bottom if it's necessary or not, doesn't have to be. But we now know that this is fully engulfing the previous candle. It also has a pin. So pin engulfing candle basically means that completely gives us a signal that bears are fully in control on that bar. Engulfing bars are the strongest signals we can find on the market to get in. So we have a previous candle, which is this doji in indecision candle, and then we get this huge candle basically with the full body that fully takes over or engulfs the previous candle, and this is called a bullish engulfing bar. In the bearish market we have the opposite. We had bulls being in control up until this point. We have this bullish candle created, and then we get this huge bearish move where candle fully takes over the previous candle of the bulls and becomes a bearish market or bearish move. This is the engulfing bar right here, fully engulfs or takes over the candle previously. We can see the bulls were in control coming from here, and now with this bearish move we are in a bearish or sell-off condition. We had a bearish market up until here. We have an indecision candle, and then we get engulfing bar, which engulfs the previous candle, and the bulls take over. We can see the bears were in control up until here. We see the top of this bullish candle takes over fully this bearish candle from before, and the market takes off. So pin engulfing bar, again, the same scenario. We have bears in control. This candle here fully engulfs the previous two candles, and we get a huge tail over there and a big body engulfing previous two candles, and market takes off. So this one is bearish pin engulfing candle. We can see that this one basically engulfs four previous candles here. We had a bulls in control, fully in control. The bears fight a little bit back. We have this indecision candle. Then we have this final candle. The bulls are trying to pull markets to the upside again and not able to do it. So these four candles here become engulfed with this bearish pin bar candle, and the market takes off in a different direction or is sell-off. Now that we know what kind of a signal we are looking for to place the trade, this brings us back to the chart that we already marked. Once again, I'm going to remind you why we marked these lines. We went on a weekly chart. Again, the most important area of support and resistance is the most recent area, and this is the most recent area where the market is at right now. So we marked this top right here, which also corresponds to this area here, this area here, this here, this here, this here, and this is a weekly chart. So every single candle here represents 1 week of trading. This is the area that we are looking at, and this is definitely confirming us that this area is very significant for us to look for. We switched to daily chart to take a look what's going on, and do we have the opportunity to trade over there. So do we have the opportunity to trade? Take a look at the signal that's formed right on that line. So we marked this top here on the weekly chart because we found that this was a very, very significant level for us in order to look for trades. So this line here is becoming an area, remember this, an area to hunt for those trades. We see the market was climbing. It stops right at this area. Why is this area very significant? Well, the market stalled before, so we did expect this to happen. Transition from the bulls to bears, it doesn't happen right away. However, it happens in a couple of sessions. So we have this market moving up until, let me just enlarge it here now so we can see it better. All right, so up until this point, we can see all these blue candles, so that means that bulls are fully in control. So you can see out of this point here, we can see a very strong candle, another strong candle, and then we see these bodies getting smaller and smaller and smaller, and then we have this move where the market tries to go through this area. It did not make it. This red line represents that exact point where we marked on the weekly chart. The bears are not letting the price go higher. So what happens with this candle here? So we can see that after bulls were climbing and fully in control, we get this red beautiful candle, which is, by the way, engulfing candle. We can see that this candle basically engulfs the previous, let's see how many, engulfs previous two candles. So first of all, we get this beautiful engulfing bearish bar for us to go short, or basically start selling. We have to have three conditions to be met in order to place the trade. First condition, market has to be in our favor. So basically, we are looking from left to right and we can see the market is falling, so the sellers are in control. We met our condition number one. We are looking for the trade that goes with the trend, and trend at this point of time from left to right, we can see that the market is in sell-off mode. It's selling off. Second condition must be, it must be the area of support and resistance, and this area here where we mark with the red line, this is a condition 2. Red line represents a significant area of resistance at this point of time. So we met already 2 conditions to trade. The third condition is a signal. And the signal we are looking at right now. And the signal that we are looking at right now is this engulfing bearish candle that engulfs these 2 previous candles, or 2 previous days of trading were covered with fully with this bearish candle. So now again, I said that the transition doesn't happen right away. It could happen, but it doesn't happen very often. Usually you have the struggle between the bulls and bears before one takes over. Or the market goes into consolidation, which means the market will just go sideways for a couple of sessions and then try to make its move to the up or downside. But at this point of time, we are looking to sell. So we met all the conditions. The trend is in our favor. We are at the resistance area at this point of time, and we have this beautiful, beautiful engulfing bar happen over here. The next session, the next day, we are waiting for this low of this candle to be broken to get into a trade. However, the bulls try one last time to get into the buying market. The bulls are trying one last time to try to push the market higher, and they succeed. They make this little higher than the previous of this one here. We get this beautiful pin bar that closes with the body within the previous candle. We have the attempt of the bulls to go through this area, and they did, but they were not able to hold this area or hold the price. The bears take over and they push the price back and they close it right here. We get this beautiful pin bar that gives us even better entry than this engulfing bearish bar. So the entry for this bearish bar would be once this low is broken. With this pin bar, we get signal to go earlier at the earlier point, at this point of here, instead of getting into market at this point, which is with the previous session. So we have two confirmations. We have an engulfing bar, which engulfs fully two previous bars. So we know the bears are in control. The bulls try to bring the market even higher. They make this little fake out. They make this fake out move right there. Bears take over and close it as a bearish pin bar. And then we get a beautiful entry into the market at this point of time. So our profit at this point of time is already here. So this is our profit if we were to enter this market at this point of time. If we were to enter here, our profit would be much lower. As we can see here, it is much lower than from that pin bar. Either way, you would have a successful trade, and you would find the most probable trade you can find at the perfect area, which is this resistance here, with the perfect signal of bearish engulfing bar, perfect signal of bearish pin bar, and the market just falls and you are on the right side. So to recap, condition number one, we have the trend that's in our favor, which is going down. So the trend is your friend, and we are looking to sell at this point of time because we can see that the market is going down, or it's a bearish market, or it's seller's market. Condition number two, we have to find the resistance area. Resistance area that's very important, and we found it with this red line that is right there. So that area is for us to look for the trade. We are looking for the signal. And the third condition is the signal. We need either bearish engulfing bar, or we need a pin bar, or 2-bar reversal, so one of these signals, or the candles that I went over there. So this is the conditions. This is the three market conditions that we have to meet in order to get into trade. Let's also look at the example for the fallen market and how it turns into a bullish market after the proper signal and the proper area has been marked. So we have a falling market, or bearish market, or seller's market at this point of time, and we continue on. We create the first low here, so we mark this low with the line because this is the lowest low, or this is where the price is located at this point of time. We move, the market retests this low again, comes back again to the same exact point like the previous two candles almost. Then we have this bullish candle signaling to us that a market might be turning into a different direction. After this pin bar, there's another pin bar. So this, as the market was falling, we create one pin bar. We do not react in that because we don't know if the market has reached the bottom or not. This second candle was the inside candle and never broke the top, so it was not a bullish move. It was not a bearish move. It was just basically a neutral candle. And then we have another attempt of the bears to break this area. As you can see, this is happening exactly to the point of the area where we stalled once before. Then the bulls are taking over slowly, giving us signal that it could be changing into a bull market. The next candle, we have another fight, or bears are showing some last strength of the fight over there. we have a market that's falling, falling, falling. All these three candles are almost inside this bullish candle that's formed one session or two sessions before. Then we have another bull signal that's coming in. They're coming in at the same area, so this area is becoming more valid. As you can see here previously, we had a lot of fighting between the bulls and bears where the market might be going. We have another attempt for the bears to move the market down. And then we have this beautiful, beautiful signal here where bears, this is a pin bar, confirming this one, and this bullish attempt to go long. We get this beautiful pin bar that's located right on this edge or this support that was created before. And let me remind you that every single one of these candles represents 1 month of trading. So this is a lot of trading data, and this is a very significant area what we are looking at right now. We have this beautiful pin bar that's created at that exact level. What happened here, I'm going to show you next. So what happened here, why do we interpret this signal as a perfect signal to get long or get into the trade? Well, bears, they were pushing the market below. They were pushing the market below this level here. They were, for almost a month, they were not able to hold the price below this level that's already marked. We have one attempt, second attempt. This was a third attempt for the bears to break and put the price lower than this level here. When they were not able to do that, bulls pushed in. So we have a lot of buyers coming into the market, and they pushed the price back above that line, which is giving us a perfect signal to go long. And then after the stop was broken, we were in the trade, and then the market moves on into a bullish market. We have a last attempt a little bit here to retest this candle, and then the market just moves on. There we go, and bulls take over. This is continuation candle, and we continue on in the bullish market. And this is how it's changed from the bearish market into the bullish market with the perfect signal at the perfect area. This is the kind of area and the signal we are hunting for in order to get into these profitable trades. We also have a 1, 2, 3 move. So we had a market that was falling here all the way up to here. Then we have a first leg, which was number 1. This is number 1, confirming bullish move. We are going to retest, which is leg number 2. And then we have a leg number 3. After this move here, we know that this part after this top was broken. After this was broken, this is number 3 leg, and it's a bullish market. And it's also important to understand that these are the kind of areas. So this area that we marked here, we can clearly see that how many times the market touched that area. And this is also on the monthly. So if you are a long-term investor, you will know when somebody tells you that this security is valid to get into the trade and to go long, because you will know how to find this area here or that kind of an area. You will see how many times market actually touched that area and was not able to break it. And when you finally get signal like this or something like this, like an engulfing candle, you will know that the market is changing into a different direction. So we had a market that was falling, and now with this change here and this area that we marked, we have a market that went 1, 2, and 3, and we have a bulls taking over from bears. This was bearish market. Bearish market, and then we have a bull market. Bull market. In this example, we had a market that was falling, falling, it found support, it moved up, came back to retest it the second time, move up, came back to retest it the third time. On the fourth attempt, we had a breakout with this candle here. So this was our breakout to the downside with the engulfing bar. Our entry into trade was right there. The market came down to a certain area, went back to retest it. If you missed this entry here, so if you missed this entry here, we have another opportunity here to enter on this beautiful evening star. This is the evening star pattern. That's an evening star pattern, and after the close of this third candle, we have a fall of the market all the way down. So once again, market bounces once, bounces twice, the third time, the fourth time manages to break through, comes back, which it always does, comes back to retest the same area, creates the signal for us to get in, and the market falls. I will stop the video at this point of time for you to take some notes and to try to look for these conditions on your own time. If you can pull any charts, you can try to start looking for these conditions in the market. But thank you for watching. I hope you liked the video. I once again do appreciate you watching my videos. If you find this very helpful, please do subscribe. It helps me make more videos. These videos take a lot of time and effort on my part, and I'm trying to make them as best and easy explainable in plain English for all of you to understand how to do this kind of stuff. So basically, from now on, when somebody tells you that this stock or this currency or that futures or these options are worth looking into, you will know which area to look for, you will know what kind of signals you can look for, and if it's valid for you to get into a trade or to actually invest into that kind of a security. This is Sasha signing out. Thank you very much, and until the part